Dallas does not do nearly as well of a job as we could in terms of telling people the world around what we do and all the other things. But we do have shining stars. Charlie is one of them. Charlie runs a company called GENBAND, which started out in 1999 as General Bandwidth. And they were most recently named Wall Street Journal's fastest growing venture-backed startup in America, beating 5,900 other companies, if I'm not mistaken. And Charlie's been with them since 2004. And I want to say thank you very much for coming in. And,
I appreciate the opportunity.
So for those of you all don't,
the only time I'm in this building is when I'm meeting with AT&T. So this is a fresh
fresh view.
Yeah, fresh.
Exactly. And you probably don't have this when you're.
No, Chris doesn't. He doesn't feed me wine when I come visit him.
Exactly. So for you all that don't know what Startup Grind is, the quick summary is it's a Silicon Valley-based networking organization that is in business to inspire, connect, and educate entrepreneurs. I was reading online an article in a blog, and I saw this guy named Derek Anderson that had written the article that I was interested in, clicked on it, read about Startup Grind, and I saw that Austin had a chapter, but Dallas did not. And I said, F that, we're going to start one here. So that's how it all started, and this is our third event. And our next event will be on the 4th of December. And Paul Bettner, who's the founder of Words with Friends, a company called New Toy that he sold to Zynga, now called Words with Friends, he's going to be our investor. So once again, thank you. As I tell people, I don't ask them what their background is, where'd you grow up, what your sign is. People can read about that. What I like to understand is what is your passion and what gets you a speeding ticket when you're coming to work, because at the end of the day, what we do is very, very hard. There are a lot of unknowns, there are a lot of potholes, and so what keeps you motivated?
I think for me, it's just two things. I've been in telecom for 25 years, but if you go back and you do a little bit of homework on Charlie Vogt, what you'll find is I've spent most of my career building businesses, and for me, coming to work and having an opportunity to actually change the way things are today. And building things and actually inspire the people to help us build those things is what keeps me going. And I tell our employees, all the time, if you don't feel like you're excited to come to work on Monday, you shouldn't, and you should, start all over and do something different. And I think as long as the passion's there, to where the mind's racing 7 by 24. My wife teases me all the time because I never turn it off, but. I don't turn it off because I'm passionately excited about what we're doing and the possibilities. And I think when you think about your venue here, which is really designed around those that are looking to really truly inspire and innovate, it's those companies and those individuals with DNA that are just going 7 by 24. And I love being around that kind of culture. And when the company gets to the size where we are today, it's harder to motivate 2,000 employees that all think that way, but when you're small and, whether you're 2 people or 20 people or 2,000 people, that's what's exciting.
Right. I spent 7 years at Dell. I was employee number 244. We just finished $59 million when I left, $4.5 billion, 10,000 employees. And that whole culture component that you talk about is very, very important to continue that momentum. As you mentioned that when you started with GENBAND, it's 80 employees and no revenue. Now you got $700 million in revenue. You've got roughly 2,000 employees, and I know offices literally around the world. What's the core component of how you keep that motivation and keep that ethos that helps you drive it forward and helps you be successful?
I think it's just like the Wall Street Journal, sort of tagged. It's really the next big thing, and it's really about motivating everyone on what the next new and the next big thing is going to be in the company that's going to drive, behavior. And one of the things that has been really interesting for me over the years is to learn how passionate people are in finance and engineering about customer wins and new product innovation. And it didn't take me very long to realize that the folks in finance are really passionate about that because they know that they've got a career path as long as the orders are coming in and the business is doing the business is doing well. And the engineers obviously, want to continue to be motivated, inspired, and funded to enable them to continue to innovate and deliver new technologies. And so it's a big part of that.
When you look at your position in the marketplace, especially with the recent publications, obviously you all have the ability to attract a lot of good people. But is talent a constraint of your business right now? And if so, how are you addressing that?
I think that you can attract employees easily based on the vision and strategy of the business. The hard part is retaining those employees and motivating those employees long term, and that has everything to do with the culture. And I am a huge culture-driven executive, and I believe that you're only as good as the culture that you can create. And so, for me, the employees are your greatest asset, and the only way that you're going to be able to acquire those assets and retain those assets and motivate those assets is if you could create and foster the right culture to where they're motivated every day that goes way beyond just the financial rewards and the financial freedom that, frankly, a lot of folks that come to an established startup, they're following, visionary people,
right.
Because they find that there's a unique opportunity for them to accelerate the skill sets they have and find a way to find that financial reward that they wouldn't otherwise have in a traditional corporate environment.
So let's break that down a little bit in terms of some of the let's call it benefits that you all offer, and some that you've considered that you may not offer now, but you're interested in the future. Obviously, telecommuting is a big deal. Flex hours. What are some of the other things that you all offer that would be conducive to the culture you're trying to drive, but also unique in terms of, hey, these are the things that employees value, and it helps us attract and maintain and retain the best talent?
Well, let me partition it on two categories, because one of it is it feels like the question might be more true benefits and monetary versus the non-monetary value that employees get in the sense of what benefit they get by working at that particular company. And for us, I think that from my office down, we've instilled a culture to be as transparent, all the cards face up, and I think giving our employees, wherever they're at in the organization, a true voice, and give them the opportunity to participate in whatever we're doing is a huge motivator. We have all kinds of, call them contests, but ways in which we can pull in employees in the company to participate in really tough stuff, things that we're trying to solve, real operational challenges and problems with the company, to real innovative kinds of things. And so, really getting our employees to be very inclusive in the decision-making, process is, I think, really important. Because, when you're five guys in a garage, you all are having a strong voice in the way the company's, going to navigate itself and the decisions that are being made. But when you have 5,000 employees or 2,000 employees, sometimes, employees find themselves to be lost. And how do I actually move the needle? And a big theme inside of GENBAND has always been, I want to make sure that every employee in the company has an opportunity to move the needle, that they actually have a voice, and their voice will be heard. And, there's an old saying that my door is always open, and it either is or it isn't. But if you come to GENBAND, my office is all glass, and it truly is open, and everyone comes in my office, without even knocking. And that's sort of the culture that I've tried to embrace, and I feel like it's that kind of environment that instills the kind of inspiration and imagination and innovation that all companies of all shapes and sizes truly need.
Yeah.
That's right.
Our last guest was Phil Romano, and he says, "I'm a mad entrepreneur. I want to make a difference." So, kind of to the point you were just said, is empower that employee to make a difference and move the needle.
And feel comfortable that you can make a mistake and not get fired. And that's a real important one. Is when you create a culture, when you create an environment where employees actually feel comfortable enough that they can actually raise their hand and provide some controversy, and they can actually implement decisions that they feel like is in the best interest of the company, and fail, and still know that there's job security.
Right.
That's when you know that you're making progress. Where I feel like in so many companies, there's just so many landmines that are there waiting for employees to fail, And you know, as you and I know, you've been a very successful entrepreneur. You've got to fail many times before you can really figure out the recipe.
Right.
And you know, there's people that get lucky, but most often, you know, you've got to fail in small steps or large steps before you can actually make the big steps.
You talk about Landmines. As I mentioned, GENBAND started in 1999, so they've gone through the 2000 landmine and the 2008 landmine.
And the 2004 landmine.
That's right. It's true. In pretty creative ways. So kind of go back to the GENBAND story and talk about, you know, you came on board in was it 04, roughly 80 employees, and you were pretty creative how you scaled the business up. Kind of take us through that process.
Well, it's a really an interesting story because you know, it was a venture-backed company that, as you mentioned, started in 1999 to build a voice over IP gateway, and you know, a lot of that technology back in that time frame, you know, was very highly capitalized technology, and you know, the venture capital you know, portfolio had put, you know, almost $100 million in the company from 1999 to 2004, and found themselves peaking the employees at about 400 employees, still very little to no revenue, to a point where they had to downsize the company in 04. And actually, I had just sold another company here in Dallas called Taqua to a public company, Etiquette, in 04. We convinced companies and their investors that having shares in GENBAND would be worth more than having, you know, shares in their existing company. And so while you were going to own a smaller percentage of our company, you were joining a company that had more scale, and that together we were going to be stronger, and ultimately that value was going to be worth more. And you know, to really tell an interesting part of the story, in 2000, I actually started with a company here in Dallas that many of you may have heard of called Santera Systems, which, you know, was a high-flying startup that raised $300 million. And I left to join Taqua, which we ended up selling to Tekelec, and then I became the CEO of GENBAND, which we ended up acquiring that switching division within Tekelec that consisted of Santera and Taqua, and we actually had acquired another company called Vogt that was here in the community. And so in that very short period of time, we acquired a company at the time that was 4 times our size. So from 2004 to 2006, we had grown the business organically from sort of 0 to $25 million. And Tekelec, which was a public company that was losing, this particular division was losing $70 million as a public company. We convinced their shareholders that division would be better inside of GENBAND than it would for them as a public company. And so they spun it out to a private company. We gave them a small ownership stake in the company. And the next day, I sold Taqua, and I think I'm the only CEO in telecom that sold the same company twice. Because I sold it once to Taqua, and then I sold it twice to another private equity firm. And then we ended up buying another company in 08, and really the most transformational acquisition that we transacted was in May of 2010, and that's when we bought the voice over IP division of Nortel, which was a business case in itself, in that, you know, if you go back to the sort of 2008, 2009 timeframe, it was probably the most challenging financial time in our days that we'll remember. And you know, I went to J.P. Morgan and gave them a business case for them to loan me $400 million in the worst recession of all time, to buy a business out of bankruptcy. And
from 90,000 employees to about 5,000.
That's right. And so, you know, like I said, I mean, the Nortel transaction is a Harvard business case study on its own. But, you know, if you just think about the way GENBAND was built in a really a decade where most companies were retreating, we found it as a fertile ground for us to try to uniquely and creatively roll up the space. And so there's lots of ways to build your business. Most of the folks in the room are true entrepreneurs, and it's really organic. But, you know, I got to tell you, there's a lot of businesses that in the world that y'all are living in, especially they're very software defined, that have done a lot of mini roll-ups that aren't ever really even told. to get to where they're at. And I think that M&A still plays a huge part, regardless of the size company you are.
Talk about M&A on culture. Because, growing up at Dell, we looked at Microsoft, and Microsoft did not like to hire experienced people. They didn't want a cancerous culture coming into there, and they morphed that over time. But if you've got this strong culture with, GENBAND in 2005, 2006, and you start pouring on these excess, talk about because there's a yin and a yang there.
Well, we've made 7 acquisitions, and I think we've probably passed on 25. So the number one reason why our deals go south is because of the culture. If there's and I would argue that there's been large transactions that we've seen over the last decade that came together because financially it made a lot of sense. If you look at Alcatel and Lucent, you'd say that those 2 companies made a lot of sense financially, but 2 very different cultures. If you look at Siemens and Nokia, on paper, 2 businesses that made a lot of sense to combine, but 2 very different cultures. And so I would tell you that the reason why our deals, historically have done well is because I'll hit the, the no pass line if the culture is something that is going to, truly inhibit our ability to grow. And I think that too often, management teams don't spend enough time really looking at, how significant the culture is to really amplify or decelerate the momentum that one company or another might have. So it is our number one. I mean, you get past the givens, like there's a technology fit, there's financial profile fit, there's cost synergies, sales synergies. You assume all those things are there. I mean, if the culture fit is not there, I mean, you can't do the deal.
How do you do diligence on the culture?
Well, it starts at it starts with the management team, because really the management team, in my opinion, defines the culture. So we feel it, when we're going through due diligence, and for the most part, depending on the size company, you're really getting when you get down to that second layer of due diligence, I mean you've got somewhere in the 20 plus people involved on both sides, and so you can really begin to feel what that culture is like, and it's amazing how much discussion takes place over dinner and over a glass of wine about the things that they like and they don't like about their company, that they don't realize they're sharing you that information, that they're sharing it with you. One, because they're excited about the prospects of being part of the new merged company. But we definitely learn a lot about the culture. We do give a lot of liquid courage, which if you notice, I haven't drank any yet.
Garçon.
So the culture is, as you can hear, in your first question and leading in this one, which I appreciate, because I do believe that M&A is really defined by the culture, and it's really established by the management team.
It's just personal curiosity. Corp dev versus the product lines. Who drives strategy? You can see it in both companies.
Yeah, I would tell you that on the mature companies, it's the product line. I mean, the business units within larger corporations have a huge voice in how that product evolves, but I would tell you in small companies it's really business development, corporate development, and it really stems from, as really getting engrossed in the ecosystem that really exists in the industry that really helps you to create kind of an accordion of ideas,
right,
and how, the ideas that you're seeing around you end up becoming enablers or competitive. And so I agree with you. I think that in the smaller companies, it's more business development, and in the larger companies, it's more structured. Yeah. I mean, for us, our business development inside of GENBAND is really all about, IoT and the ecosystem, and, how do we interop with Microsoft Links, and how do we become a better business partner for Dell, and right, those kind of things. Where the innovation, we've actually taken the office of the CTO and really created a true, innovation kind of area, to where that's really where a lot of the vision, the long-term vision, the 3 to 5 year vision is really defined, where the short-term, roadmap is defined by product line management.
I do want to get into products in a little bit. One thing I'm always interested in is how you prioritize, and then where do you spend your time, and how has that morphed as you've scaled up your business? Because I'm sure your time is different now where you allocate it than when you were allocating in 2004 in other early stage companies you've been at.
Well, it's interesting you say that, and just so that you all know, we just met tonight, and Gene Bayless had actually asked me to join you, and before tonight we've had 0 conversation about the topic.
We promise.
But it's interesting you asked that question because last week I actually sent an email to all 2,000 of our employees on communication etiquette. Because I don't know about you, but I get about 500 emails a day, and I have a slight case of ADD, which means that I read all 500 emails. And so, you know, I find that we're in an environment today where we're so accessible that we're becoming more and more unproductive.
Signal-to-noise ratio is very high.
It's very high. And so while I think this, you know, world of sort of being connected is great, but it has its advantages and disadvantages. And I would say that, you know, for managers, let's just call the leadership team of companies managers who have, you know, they have their own, you know, personal responsibilities, they have manager responsibilities, and they have, you know, operational responsibility. You know, they have a flood of email, conference calls, and meetings that they have to manage. And I am finding right now that there's too many emails that are being addressed to people who don't need to be part of the email thread. There's too many conference calls that are being established with people that don't need to be on the conference call, and there's too many meetings that people are being invited to that they frankly don't need to be in the meeting. And so we've actually spent a ton of time talking about the productivity of the average employee that is being diluted significantly because of how well connected we are and how easily accessible we are. And this bit of, you know, CYA that goes on in the company that, gosh, you know, if I'm not in that meeting or if I'm not on that email thread, I might not, I'm not in the know. And so it is a transformational process that's going on inside of GENBAND that it's okay if you're not part of that particular email thread. But, you know, if you're going to send an email to me, I'm assuming you want me to do something. Don't copy me on something unless you're assuming that I need to have a role in whatever that is. And I think it is a significant cultural change that we're going through right now. And I think, you know, frankly, it is something that every company is having to deal with. I see the same thing with my friends. You know, you get on a distribution list, and, you know, all of a sudden you find yourself
30 emails,
you know,
20 minutes.
Yeah, I mean, you know, and then you actually find yourself being invited to participate in an email thread that's 2 months old. So let me ask you, do you want me to go through what happened 2 months ago to get myself caught up, or, you know, what is it exactly that you're looking for me to do? So anyway, it was a great question because I'm pretty passionate, as you can hear, about the fact that I frankly think that, you know, we're creating a society of not being more productive, but less productive if we don't figure out how to use this connected age that really has come about with social networking and email and you know, the way we can intuitively, you know, leverage, you know, for the voicemail, and so it's a hot topic with me.
So Ross Perot, when he was General Motors, he said if we saw a snake, General Motors form a meeting, see if we saw a snake, and if we saw a snake, we form a committee, figure out how we take out that snake.
Yeah.
I mean, it doesn't change, but it's human nature because everybody wants to be inclusive.
That's right.
You've got the brown-nosed politics that goes on that only gets more pervasive, and it is hard, and it goes back to culture. Right?
Yeah, it really
goes back to culture. If you are empowered, you can do your job. You don't have to know everything that's going on to be empowered.
Yeah, you have to have a different sense of job security to not be in the know. Mm-hmm. And it's hard.
That's true.
I mean, you know, just look at your own social, you know, setting. I mean, how often is it that, you know, in your social environment that you have to know everything that's going on with your family and friends and everything else? And I will tell you, I'm the first one that I don't care, you know, and unless my sister needs me to do something or my mom needs me to do, I don't want to know about everything that's going on over there.
Sergeant Schultz defense.
Yeah, I don't have a Facebook account. I have 3,000 LinkedIn messages that I haven't received. So I tell people that if you want to get a hold of me, I'm not afraid of giving you my mobile number. I'm not afraid of giving you my email. Just call me, you know. But make sure that, you know, you have a real agenda when you call me or send me an email, because I can barely manage my own communication vehicle, not to mention, you know, a Facebook account and a LinkedIn account and everything else. And not to say that those aren't very valuable, you know, tools, because they are, depending on, you know, what business you are. But for me, you know, they're not as productive as I'd like them to be.
So it was a very insightful answer, because it kind of goes in between the time and the priorities, because there's a tension between all of this inundation of communication we get in terms of how do I allocate my time and then how do I prioritize the time.
Yeah, my priorities, frankly, are in two categories.
Okay.
When the company has problems and when the company has opportunities. I mean, you know, you're really narrowed down at my office.
It's binary.
It's really binary. You know, when there's challenges that we need to solve that requires, you know, my office's attention, or there's an opportunity that's so significant that you need my help, is typically where I prioritize. Now, there's a lot of things that happen in the middle that really are value add to building the business.
Right.
And I am, you know, I'm a quasi CMO that has, you know, my marketing team hates me because I'm the idea guy at GENBAND, and people say, well, you know, well, how come you never went into marketing? I said, well, it didn't pay very well. But I love the marketing side, the go-to-market side, the idea side, the creative side, and I'll never let, and I think most entrepreneurs are that way. But it's the, you know, if you think about the way we go to market, it's very creative, and it's because I just can't turn that side off. And so I do spend a lot of time in that creative side of, you know, how are we going to build the business? How do we uniquely, you know, align the company to better compete in a very fierce market? But it's, you know, if there's a customer issue or a customer opportunity, they take #1 priority.
I wanted to ask you about how your style has changed, because I doubt your principles have changed based on listening to you. But your style's changed as you've had more people and how you delegate. But before we go there, we go back to part of the original one that I just thought about, which is, how do you strategically think about your business with all that? Do you take a week off? Do you, do something on typical days, or is there a time in the morning, or how do you separate the wheat from the chaff and say, okay, I just need to think about the big picture, because you can get caught up in the minutia pretty quickly?
Yeah, I've been part of YPO for 10 years, and I've been the poster child for my forum on work-life balance, because I don't have a very good one. And to the point that my forum, which is made up of some very, very successful, CEOs, said, said you got real problems. And part of it is I wish this wasn't being videotaped, because, I'd be afraid to admit that my wife is right. But, I don't spend as much time as I should, with family. And I think most entrepreneurs find themselves in that sort of, spigot. And that, for me, my work and my family and my friends tend to really blend, because I love them all. Now, I'd be lying if I said I didn't love my family first, but the point is, when you're so passionate about something, you get driven to where, you want to find, a happy medium to where, you can equally participate in each one, because, I enjoy coming to work every Monday. I enjoy doing what I'm doing, and it's why I think so many folks are successful at what they're doing. But I would tell you that I took the first 2-week vacation in my entire life this summer. So I've never taken a 2-week vacation in my life, and I'm 50 years old until this summer. And I took my family all over Europe, and my kids were kind of getting at that age where, we wanted to take them, and have them experience, Europe on our dime when we could. Right. But I'm one of these that I'll take a week's vacation, and I'll work the whole time. And the way I work is I go out on the beach with my kids and family. I'll go to dinner, and then when they're all at sleeping at 11 o'clock, I'm up till 2 in the morning. And it's just I just don't think I can change. It's just the way I'm wired, and some of us are wired that way.
Do you have to wake up at 6 and 7 like me, and you get 4 hours sleep? Or?
I'm a 4 to 5 hour a night sleeper, and part of it is I don't know about you, but as I get older, I think I just require I think you just require less, but. I kind of go to bed at midnight, and I get up at 6 is kind of my routine. I'll have international, because we're, GENBAND's a company that's, we're in 80 countries. I'll have conference calls with China and Singapore and New Zealand, and, so I end up, finding myself, working some crazy hours. But I will say this. I have matured over the last, I'd say, 5 years, and it gets better every year. And part of it is just surrounding yourself with really smart people. And, when you're a small company, you just, frankly, can't afford to hire really smart people. I mean, unless you're willing to give them a percentage of the company in the stake of ownership, you can't afford to hire the really smart people. So you end up having to be everything. And you know, GENBAND has finally gotten to a point where, you know, we can afford to hire a lot of smart people. And, you know, over the last several years, I've surrounded myself with some really, really smart people, and that has helped me manage the business a lot better, to where I don't feel like I'm the CFO and the CMO and the sales guy and the engineer, which is, you know, kind of how I've grown up. Which is why it's hard to get in a room and have a conversation with me and challenge me on anything, because I've worn all the hats.
Right. Well, and that was the question I was going to ask before I went back to the other one, which is, as you scale up, you know, you can't do everything. Like Michael Dell had a great saying. He said, if everything had to go through my desk, we would have not grown as fast. So he finds people that have complementary skill sets to what he does. He gives them a lot of leeway. He gives them objectives, lets them go take the hill, and he focuses on where he thinks that he adds the most value, and he checks in.
That's exactly my style. Exactly. And you know, my team would tell you that, you know, I mean, I could go days without talking to the guy who runs global services. I mean, and people say, I can't, you're running a,
well, you don't have a problem in that business, so.
Well, exactly.
Yeah.
But my point is I'm not micromanaging to where I got to check in every day. You know, we have staff meetings once a week. People know how to get a hold of me. I know how to get a hold of my team when I need them. But we really have mature, you know, executives that know how to run their businesses, and that what that does do is it allows me to spend more time where things are broken and where we have opportunities, to your point.
Probably 15 years ago, I was reading Fortune magazine, and they followed Bill Gates around for a whole entire week, and he never called the office. And they said, this is kind of interesting. You run this large company, and you never called your office. He said, if I have to check in the office after a week, I've hired the wrong people.
That's right.
I thought it was pretty interesting. Going to product. Talk about your product lines, and then talk about trends that you see starting to form that people outside the industry might not be aware of, that may create opportunities for people thinking about their particular businesses. Well,
we basically have 3 product lines. We have a core switching product line that, you know, in simplicity's sake, you know, actually the technology actually provides the intelligence and the connectivity for how, you know, consumers and businesses place calls. And it started out primarily voice calls, and now we've evolved to multimedia calls. And so, you know, as we saw the industry evolve from just a sort of a voice-only industry to a very data-centric and multimedia-centric industry, we started to get into, both organically and through some of the creative M&A deals that we did, you know, sort of this multimedia environment. And so, you know, we've invested a lot of money in where, you know, the applications are going in the sort of vertical stack of how they're really, you know, providing the value and driving a lot of, you know, the way, you know, voice, data, and video calls are being managed. And I think that for us, you know, there's still a tremendous amount of opportunity on, you know, enabling a much better, higher quality end user experience than it is today. And you know, a lot of folks would say, gosh, you know, the end user experience today is at an all-time high, and it is. But I guess we see it as an opportunity. You know, we see the opportunity to enhance the end user experience, you know, 2-3-fold from where it is today. And so a lot of the innovation and creativity that's going into what we're doing right now is really about how do we give the end user a better experience, you know, overall. And that experience varies from end user to end user. And I would say from a core telco guy who spent, you know, for the most part, our whole business careers building technologies that we thought were applicable for service providers to then enable them to deliver services to the end user. You know, that sort of sequence. Hey, we're smarter than the telephone company, so we're gonna provide this great technology that's going to now allow you to deliver this new service. And that's kind of how things worked for a long time, until really the smartphone was launched. And it was really at that point that we saw a different kind of innovation occurring at the user, where the user was actually having a voice in what was being defined inside the network. And so today, GENBAND's spending a lot more time, in fact, more time than we ever have, you know, talking to you and you and you and you and you to really understand what is it that you're really trying to get and accomplish out of whatever device it is, or however way you're going to communicate to where we can enhance that. And, you know, there's a huge opportunity right now to figure out, you know, how to do a better job of federating all these different, you know, communication environments that, you know, we're currently dealing with today. And so we have a huge initiative right now underway to really figure out how we can blend all the address books and all the different social networking and provide all the different required security that that ultimately the end user is going to need to be able to have a much, much better user experience today. There's still a fairly frictional kind of environment between the service providers and the over-the-top providers.
What do you mean over the top?
Over the top, that's anywhere, it could be a Facebook, a LinkedIn,
Okay.
any of the social networking. It could be Netflix, it could be Google, but, there's the traditional service providers that are having to coexist with those application providers that are essentially using, their network to deliver services to the end user. And, it started out very, very, very competitive, and now I think the service providers are trying to find a way to coexist in a mutual balance kind of environment to where both the over-the-top players and the service providers can both benefit. And so I think there's a lot of opportunity there. We're getting ready to announce a product early part of next year that's going to help bring those two environments closer together. We've got a product that we launched last year called Mobile Life, which is a consumer-based application product, and we have a product that we call Mobile Office, which is a mirrored version for small enterprise, small medium-sized enterprise, and those application platforms are doing very, very well. But it's really about trying to abstract all the things that consumers and businesses need to really allow them to get into the 21st century and use all this cool technology in a way that doesn't feel very sort of binary and very silo. I mean, today, I do have an iPhone up here, but Samsung just gave me a new Galaxy, and here's a problem. I've got I wish I'd listened to music more than I do, but I probably have 500 songs on my iPhone. Now, for me to switch from my iPhone to the new Galaxy phone, still using AT&T's network, I got to go through a whole rigmarole to pull my songs over. So we're actually
Spotify.
Yeah. So we're doing some cool things that are going to make it really point and click to allow those to do those kind of things, to truly be able to federate all these different applications regardless of the platform. And that is, for example, an example of a user experience that you might not think is frustrating, right, but it is. And there's hundreds of examples like that you love all this cool new technology, but you're locked into a platform, and we're unleashing that environment to where we're going to make it a lot.
Do carriers like that or don't like that? Because it's a double-edged sword for them.
I think carriers definitely are going to like it because look, whether you're talking to AT&T or Verizon or Sprint, it doesn't matter what carrier you're talking to. They all feel like their platform's the best. And if we give them an environment that gives non-AT&T or non-Verizon customers an opportunity to seamlessly move over. And, oh, by the way, if we give all their handset players an opportunity for them to be able to, really point and click and auto-configure and take advantage of all the apps that you have in a very federated manner, I think everybody is going to be very... And the problem is today is the technology is moving so fast that not one of those equipment suppliers can do that.
Right.
I mean, Samsung's not going to do that. Apple's not going to do that. In fact, Apple wants to just keep you all on their platform. Selfishly, you can't blame them. But, for us, we see a huge opportunity to unleash,
To allow it to be more portable.
That's right.
Yeah. I can talk a lot about, or question a lot about product. Let me ask you one other question before we open up to the audience, and that is capital allocation. Whether you're at a very small company that has $100,000 or $10,000, you've got $100 billion. That's a very, very important process. How do you make capital allocation decisions, and has that changed over time?
I would first say it's never changed.
Okay.
And it's never changed because, capital allocations, whether you're a startup or a large company, comes first in sort of three buckets. First, you have to have the right idea, and you gotta be at the right time, and there has to be a market for that product. Now, there's a lot of companies that if I just gave you the specs, you can write the code, you can deliver the product, you can get lucky on the timing. But the one thing that most companies don't have is courage. And if you don't have the courage to actually spend the money,
Especially in hard times.
In hard times. Knowing that, you're bringing a brand new product to market, and you're really banking on, what the probability of success is going to be, not knowing what hundreds of other companies might be doing. I mean, right now, I don't know, what all my peers are doing in the industry, what's going on in their think tanks, what's going on in the whiteboard rooms, the war rooms, as to what they're thinking about. And so I am convinced that, you have to make sure that you've got the right ideas that match the right time, that are profiled by and validated by the customer base that you're going after. So assume that you've done a good job with that. You still have to have courage. And if you can do all that, and you have the courage to actually spend the money knowing that you could be losing that investment, whether it's shutting down the startup, it's taking $20 million from Seven Rows and investing it in this particular, placing this bet, or spending CapEx dollars or OpEx dollars inside of a larger company to try to foster a new business opportunity. And unless you have the courage to do that, you're never going to be a winner. You're never going to be a winner. And this is this whole environment here is really all about entrepreneurs. That's their DNA. I mean, that's what makes them tick. But you're not going to be able to raise money unless investors, whether it's an internal investment or an external investor, unless they can see it in your eyes that you're convinced that you're going to place all the bets that need to be placed, and you're going to roll the dice the way they need to be rolled. And
I've always found it interesting that Fortune magazine 1965 Fortune 500, 67% are gone, including A&P, which was the Walmart of the day. And it's, are they allocating capital correctly, and they're just making bad decisions and not having courage?
Well, the hardest part is when you get to a point where you're our size, or Alcatel-Lucent, when you actually have to make a different set of decisions, and that is, when do you cannibalize your own products? And 18 months ago, we placed a really big bet. I mean, financially, we made a $100 million investment to cannibalize our market share leading product.
That's courage, Charlie.
That's courage.
That is courage.
But we knew that this first generation product that Nortel had built, based back in 1999, had a negative growth curve to it, and we could either ride that growth curve and find ourselves in 2015 with nothing, or we could spend the money to develop what nobody else was willing to do in our space, because it was very highly capitalized, and find a way to grow that business. And we did that 18 months ago. We're going to deliver $30 million this year in revenue on that new platform. The old platform is going to decline $100 million. And so we're finding ourselves in 2013 to where there's actually a very positive inflection point to where we'll actually, in 2013, sell more on the new platform than the old platform will decline.
That's pretty quick ROI.
Yeah, it is. In 2 years, 2.5 years, we will have spent almost $100 million. In R&D, in that, and really kind of going back 2.5 years. But, you got to be willing to make those kind of bets. You got to have the courage to spend the money. And, I'm a high probability of success kind of leader. So, I'm kind of giving you the cliff notes. But, underneath all the cliff notes is a lot of definition and probability of success criteria that, to get a business plan approved me is really hard. Right. But once you get it past me, I'm all in. And when the guys were trying to get us to go all in on enterprise, 2 years, it took them 2 years to get their business plan past me to actually, roll out an enterprise strategy with our new cloud-based offerings that I mentioned, that we ended up going to market with Avaya. But the point is that was a clear case that it wasn't about product, it was about channel. Right. Because in the enterprise world, if you don't have the channel, it doesn't matter how good the product was, and we didn't have the channel. And so until they came to me with a way in which we were going to go to market very effectively with a big channel, I wasn't on board.
Right.
So
Clayton Christensen, The Innovator's Dilemma, he talks about how companies don't invest in the early technologies like transistors because the cash cow is the vacuum tube, and you guys are bucking that trend, and that's pretty impressive.
Yeah,
it's pretty impressive. So, any questions from the audience? Yes.
I have a question. How do you translate?
Hold on 1 second. Do we have a microphone? Speak up, and I'll repeat it while you're getting my shot.
So, how do you translate the employees' ideas and really come to the board, and how do you keep that motivation going when some of their ideas are quite good and get shot?
So the question is, how can you take the employees' ideas and get them to the board? And then the second half of that is?
How do you keep them bringing those ideas
How do you-
so they don't feel bad if they're
How do you keep motivating to bring ideas to the table?
So we've done a couple things. As I mentioned earlier, I mean, I would say that we have sort of two buckets. You know, being a technology company, we have, you know, sort of this innovation idea bucket, and we have sort of this operations, sales and marketing operations idea bucket, because, you know, there's a lot of innovation that actually doesn't equal a product, but it has a lot to do with, you know, efficiencies or innovative ways to you know, to better manage, you know, the business. And so we actually have a very formal awards program inside of GENBAND that both financially and, you know, from just a pure recognition perspective, recognizes those employees that are contributing in those areas. And, you know, one of the things I found a long time ago, having spent a lot of years in sales, is that while we're all financially motivated, and I like to use the coin that I phrased back in the 90s, that, you know, the really good salespeople are coin operated. You know, when you can find the sales guys that are really coin operated, you have something. But, you know, I have found that people want recognition more than anything. They want to know that they're being recognized for whatever it is that they did good or whatever idea they had. And so we have a very formal program, happy to share it with you offline, that we rolled out about 2.5, 3 years ago that has been wildly successful. And that rolls up into an awards trip that those people actually get at the end of the year. And then subsequently, we've taken a very aggressive position on the innovation side to file, you know, X amount of patents a year. And so, you know, we went through a period of time where we just frankly couldn't afford, or we couldn't financially justify, you know, the cost and the time that it takes to file patents. But I would say over the last 3 years, we've gotten very, very aggressive in trying to, you know, stimulate the ideas within the engineering community to help us with those ideas that could turn into products and could turn into a patent. And there's nothing more motivating for an engineer than to be awarded a patent. I think you had introduced me to a gentleman earlier that has 20 patents that you found a way to lure him into your company. You know, that is, you know, so there's really these two sides of the pendulum that, you know, GENBAND is one of the, I mean, we're one of very few companies that still has a president's club. I still am from the old school that, you know, you can financially motivate all day long, but unless you can find a way to recognize the people, the top performers in the company, no matter where they are in the company, you've got to find a recognition program that you can stand up at the end of the year and really spotlight them. And we started it 3 years ago. It's wildly successful. It starts out with a nomination process. So every employee in the company can nominate, you know, 3 people. And that funnel then, you know, kind of funnels up, you know, to where you end up having, you know, 50 people that have so many nominations. And those 50 then, you know, kind of move through a chain of sequences to where we come up with, you know, 20, 25 people that we really spotlight and do some things special. But, you know, we have spot awards that we do, you know, all the time that, you know, tries to keep people motivated to do the extra things. It really truly is the little things that go the longest way with most employees. They want to know that you care, and they want to know that the things that they assume nobody noticed was noticed. And that's hard, but I think you first have to, at the management level, recognize that that's needed and come up with the right program that's going to, you know, promote that kind of culture. And for me, I'm a very you know, recognition and rewards oriented, you know, CEO, and doesn't matter if you're the janitor or the CEO. I treat everybody the same way, and I try to motivate everybody the same way.
Any questions? Judy? You got a lot of stuff going on.
You're a consumer app. It's interesting. So you actually started as an enterprise company.
No. We're a carrier company. We, you know, I mean, almost 100% of what we do today, you know, revenue-wise, is sold to service providers.
To other large companies. So when you indicated that you have a consumer app, wanted to get an understanding of that.
You know, think about the fact that what we do is the way GENBAND thinks is what technologies and applications can we deliver to the service provider or the cable operators that enables them to deliver new services? Whether that's a hosted service, private or public cloud service, it's really about the enablement for the service provider to provide that hosted service. And in this particular case, it's a very unique way in which we're sort of attacking, the cloud-based UC, kind of environment.
When is UC going to become as promising as it has been talked about?
Well, if you start buying GENBAND's products, just start today.
Exactly. Yes.
I think I asked the same question last time. Can you hear me?
Yeah.
Okay. Some of the decisions, from 2000 to 2005, it sounded like there was a lot of transitions for you. You had a business, you sold it, you became CEO. What's the one thing that stuck with you, I guess, the difference? You built a great culture in this new company. Is that what it is, or is it your talent? You're good at finding people? Would you say it's your instinct? Are you analytics driven? How do you make decisions through all that? What do you think the one thing is? I'm sorry, what's the one?
Is the essence of the question, how did you get through all those difficult times?
What is the one thing that you always went back to when you made a decision? You sold your company, then became a CEO. What's that one thing that, I guess, is it a feeling? Is it you see a board and you write the numbers and say, okay, this company's going to do this at this time, so I'm going to go for it? If that makes any sense.
What's the true north that got you through those hard times?
Yeah, what's...
Yeah,
the X factor.
I think that, the long answer, and I know you're looking for a word, but I think that the long answer is, I think the more gray hair you have, there's something to be said about the wise man that's, been through a lot. And I would tell you that, I couldn't be doing what I'm doing today, 20 years ago. I just didn't know enough. I didn't have enough scars. You learn through experiences. And I would tell you that, the reason why I think GENBAND has had the success that it has is because, of the experiences that I've had over the years that led me down certain paths. I would tell you that I have a lot of courage, and I amplify the risk-reward ratio with a high probability of success wrapped around it. And so, when I sort of describe the ultimate formula for success is you have to have the ideas clearly, but you have to map out the probability of success, that model, and then you got to have the courage to go implement it. And I would tell you that if I were to take you through each of the business case studies around every acquisition that we did and didn't do, I would tell you that there's as much value extracted from the deals we didn't do as it is the deals we did do. So it's tough, when you've got a transaction that you want to do, whether it's a customer deal you want to do that you have to turn down because it doesn't make business sense, it doesn't make strategic sense, or an M&A initiative that you're turning down because, there's more downside risk than there is upside potential. But, I think that it's a culmination of a lot of years of experience and spending a lot. I would tell you that if there is one thing that I would tell you that's common in my whole career is I've spent a lot of time with the end users, the customer. And I've really aligned myself really close to the customer to help them define and validate, the direction that I was always taking, the company. And so we didn't have this philosophy that we were smarter than the customer. Our philosophy was that if we had a really good idea, and if it was an idea that we wanted to implement, we wanted to make sure that we validated it with, our top 10 customers. Is this something you would buy from us? Is this something that you would expect GENBAND to actually introduce to the market? Because too often, you got to admit, Apple made probably the biggest and boldest move of anyone of our recent times by moving into the consumer electronics space, having been really a PC-driven company. But for them to go into the market that they did, introducing, a lot of people would say this is a phone. I don't know that I would call it a phone, but was a dramatic and bold shift in their business plan. I mean, I still remember when Apple was trading at $5 a share. I mean, a lot of people don't remember. Yeah. So that was a bold move, and it was a bold move that was validated, I'm sure, by the way they saw the consumer market shifting and changing.
So I'll challenge you. So Jobs was of the opinion that you don't ask the consumer what they want because they don't know what's possible. Where you've been extremely successful asking the consumer what they want and all that. What's your thought process around that? Because I don't think he went out and said, hey, I had this little iPod idea and I want to get in the music industry. What do you think? He just had this vision. And there's, there are very few Steve Jobs in the world, right?
I was going to say that's unfair.
Yeah. Well, to the point, because Apple has sucked up so much bandwidth, right, of people's mind share. Oftentimes you get these young entrepreneurs think they're the next Steve Jobs and they don't understand.
That's not the way it works.
That's not the way it works.
Yeah.
And it's hard for a 22-year-old entrepreneur to be told that.
Yeah, and you got to be careful thinking you're smarter than the market.
Right.
I mean, you got to find a way to balance your ideas on what ultimately, the consumers are going to buy. And otherwise, you could go down, a very deep, dark black hole where you're going to spend a lot of money and realize, 2-3 years into it, that you've spent a lot of time, money, and energy, and there's really not a market for it. Oh, by the way, there's 5 other companies that have already introduced that product, and you just didn't know because you were 5 men in a garage that, weren't spending any time, with customers.
Very cool. Yes?
Okay, first a disclaimer. I recently worked for Siemens, so I've kind of got a jaded attitude.
I've hired many of the Siemens employees, and the ones we have, we love.
Well, I said it was a disclaimer. So do you think that because you said your business is around 2,000 employees, what I found having worked for them was they got to a point where they're too big. They were just a behemoth. It just took them too long to get anything to market. They couldn't make decisions. They were slow. And do you think because of your size, you're playing in a field where you do have, well, used to have like the Nortels and the Alcatels and the Siemens to play against, who got so big, I think they got in their own way. So I guess my question is, do you think that's an advantage to you? And at what point do you get to a size where then you become that next sloth?
What I would tell you is, and I've heard that question. We talk about that, sort of assessment all the time, and because there's dozens and dozens, hundreds of companies that are in that category across, every type of product that is sold. What I would tell you is that, if you're not figuring out how to reinvent yourself every 3 to 5 years, you're probably going to find yourself in the wrong category at some point. And I think that the hardest part that most large operationally minded companies find themselves in is that there's not enough creative and not enough entrepreneurs in management that aren't spending enough time with customers to really understand where the market's going. Like I said earlier, the hardest decision we made, 2 years ago was cannibalizing our own product. And when you're not finding yourself if you don't see this competitive wave coming at you all the time, like I see this competitive wave coming at me all the time. I'm always assuming that somebody's trying to take money out of my pocket somewhere. There's always a competitive angle somewhere. And maybe it's, I've had lunch with Jack Welch twice. I've listened to him many times, and I absolutely 1,000% subscribe to the paranoid survive, because that's to a certain degree how I run GENBAND. It helps me foster the ideas and the strategies that we need, because I believe that the paranoid survive. And the minute that you get complacent, the minute that you feel like you're truly the dominant market share leader, is when you're in trouble. And by the way, I love Apple products, but I find that that's a little bit, the arrogance that Apple currently has right now is opening the door for some of their competition today. Because there's some pretty slick products out there today.
Yeah, and iOS 6 is not as solid as iOS 5 was.
That's right. So I think that even the most, inspiring companies, over time, to your point, and I do believe that had a lot to do with, the I wouldn't say Siemens was a failure by any means, but I mean, as a company, they're wildly successful. But you know, the telco division, I feel like you know they really rested on their laurels, and they got too comfortable with where they were, and I think them and Nortel spent too much time internalizing the technology, and we were smarter than the customer. We're going to, you know, and for many years they were. But what we've seen, at least over the last decade, is, you know, that the consumer actually has a voice. And you know, and their voice speaks with, you know, their wallet. And now we're in kind of this hyperland where the consumers, you know, are you know, sort of driving all the behavior of the way technologies are being introduced. And so I would tell you that you're absolutely right, and I would tell you that I don't feel like GENBAND's in that that sort of category, because we're always thinking about where and when our business is going to be taken away from us and how we can protect it and what new technologies we can introduce to be sort of an enabler of what we have.
A related question to that, which you all had to go through, which is, in the telecom meltdown, it really took away a large sector of customers that were now not willing to take bets on early stage small companies. And
yeah, I mean, you had the CLECs that, you know, raised billions and billions of dollars with a, you know, philosophy of, you know, if we build it, they will come. And, you know, there was this fictitious, I mean, that's what happened from 96 to 99. What happened was every infrastructure technology company couldn't ship enough products, you know, to this new age of service providers that didn't have a network. And in order for them to compete with AT&T and Verizon and everybody else, you know, they had to build a network. And once that network was built and there wasn't enough customers that came, you know, you saw the beginning of the dot-com bust. And really, you know, the bust really wasn't anything to do with dot-coms. It was telecom. It was really infrastructure players, fundamentally, that most of the value that was lost. I mean, clearly there were dot-com valuations, and so there was paper money that was lost. But if you really look at, you know, truly where the losses were in people, you know, and businesses going away that were like real companies, not like, you know, three men in a garage that, you know, had a market cap of, you know, $10 billion. That wasn't a loss to me. What was lost is, you know, when companies like WorldCom went under, and you know, real companies that you know, were caught up in making decisions that, you know, they you know, Nortel was sad. I mean, that was super sad. I mean, Nortel. I mean, gosh. I mean, here it is. You know, I mean, maybe there's people in this room that work with Nortel, but I mean, you know, that was an icon in our industry.
was there a revenue amount that you all kind of hit that you all, it really opened up those carriers to you because now they knew that you were part of the establishment?
Well, I talk a lot about this magical $40 million glass ceiling. So every time I do entrepreneurial sessions, and I love, you know, spending time with startups and entrepreneurs, because unless you have a business plan to be acquired before you've generated your first $1 million, you have to figure out how you're actually going to operationalize your business. And at least in the sort of semi-infrastructure players, there's this sort of magical $40 million glass ceiling that I always talk about, that if you can't figure out a way to break through it, you know, you're not going to have enough operational scale to make it on your own. And at some point in your business plan, you got to figure out whether or not, you know, you're selling, or, you know, you're going to find a way to operationalize your business. And I would say that most entrepreneurs make mistakes because they often listen to this sort of generic investor that says, just build a great business and, you know, your buyer will come. Well, in this day and age, it doesn't work that way. You got to manufacture your buyer. I mean, you really do. I'm convinced of that. And I'm not saying that there's not situations where, you know, you've got businesses, very successful businesses that, you know, find buyers for their business. But I am convinced that you've got to, this whole concept of networking is really about creating your own ecosystem as to who's likely going to be the enablers of your business or your future acquirers of your business. And the sooner that you can do that, the better, especially if ultimately your business plan is to be sold. And most startups are designed to be bought. I mean, most. I don't know too many entrepreneurs that believe that they're going to be the next Apple, or even GENBAND. I mean, if I was starting a business today, I mean, you know, you got to really balance this notion of Are we really building a business that's going to be attractive to this set of, well-established companies that, have the infrastructure that we don't have? Because it doesn't cost much to design a product and bring a product to market. What costs a lot is building G&A and building IT infrastructure and building a sales and marketing team. That's what's expensive, and that's that sort of $40 million glass ceiling that I talk about all the time, that unless you have X amount of infrastructure, you could take a very successful business model and create failure because you can't deliver enough earnings. You can't outpace the cost to operationalize it. And that's something that a lot of entrepreneurs don't, unless you have a little gray hair, unless you've been through that, I mean, you sometimes get blinded by that. And that's a big one.
Cool. Last question.
First of all, it was a great discussion. It was a good discussion. I enjoyed it there.
Oh, thank you.
Yeah. My question is, I know a lot of companies, they're stuck at $2 to $5 million, a lot of small companies, including ours. For the last 4 or 5 years, our revenue is stuck in that same range there. So can you please share some of the 2-3 strategies we should take to grow the company to the next level there? Definitely our challenge is to hire the smart people. We don't have enough money to hire a lot of smart people there. So what should we should do to really cross over that range of $5 million?
Yeah, so what I would tell you, and I think what I heard the question is like a lot of companies, you're kind of been in this sort of flat revenue for the last 3 to 5 years, and I think the first thing you got to do is sort of look in the mirror and understand whether or not that was self-inflicted or it's the market. Because to be fair, I mean it has been a tough market, so don't be too hard on yourself, because a lot of companies haven't navigated themselves through the sort of 2008 to 2012 period of time. One. Two, I would tell you that you've got to find people that can, and I think it sounds like you got a product, because you've said you're delivering $2 to $5 million in revenue over the last several years. So you've got a product, it's been validated by customers, and now the secret for you is finding that sales and marketing person or 2 or 3 or 10 that really have the relationships with the customer and the channels to really ignite that. And I would tell you that I would have no problems giving a small percentage of my company to somebody who I thought could double or triple my revenue. And I think that in today's times, you're going to find people to deliver a different kind of value to you as the owner by giving them some ownership than trying to pay them a commission. And you still got to pay them a commission, but I think at this stage you've got to find those people who can really move the needle, and they're out there, and they really are. And I can cite example after example of an account that we had the right product, but we just weren't selling anything. And we switch out the salesperson and we bring in the salesperson who by the way, the customer helped validate the fact that, well, if you brought this person in, he knows our business better, you'll be able to grow it, and the business took off. It could be a channel. I mean, if you're going after, the consumer or the enterprise channel, I mean, there's, you better have somebody that really has an understanding and a know-how and the relationships with all the resellers, because in the enterprise market, resellers own 100% of that market. So unless you have the channel established, or you have somebody who understands and has the relationship with all the resellers that are required to sell into that enterprise market, you're not going to be successful. The hardest market to me is the consumer market. It has the most upside, but it's the hardest market to sell to, because it's not like I can go over to Lee and sit down with him for 30 minutes and convince him why he needs to buy this, and oh, by the way, he's got the appetite to spend $5 million. Now, if you have a product that's really intended for the consumer market, and depending on what your ASP is, the way you go to market for consumer is tough, because you're counting on people hitting your website, and you're spending money in advertising, and you're spending money with Groupon, and all these different ways in which you got to reach.
Seconds to impress them.
Yeah. So I am convinced, which is why I've always stayed away from consumer market, because I think it has obviously Steve Jobs proved it, it has the biggest upside, but it is the hardest market to sell to, because you don't have a defined go-to-market strategy like you do, in our particular case, selling to the carriers or an enterprise.
So thank you very, very much.
Well, thank you. I
Really
appreciate the opportunity.
Thank you.